Welcome back to Dukascopy TV. I'm Elaine Stenson. I'm joined in the studio today by Andrey Smirnov, a founding partner with Mars Capital, an investment management company based here in Geneva that focuses on emerging markets. Andrey, you're very welcome to the studio.
Thank you very much.
So the total outflow of emerging markets in 2013 was $3 billion. Are we expecting a similar figure this year?
Potentially, yes. 2013 was one of the worst years in emerging market history for the past decade, if you exclude 2008 financial crisis. So 2014 will be also a bumpy road for the emerging markets, but there will be more differentiation between different countries because the epoch of the easy money tends to end, and with tapering, investors focus more on the fundamental issues rather than hunting for a simple yield. So in total, we expect, though, a positive performance both for emerging market bonds and credit this year.
Okay. And what countries and what markets are you most interested in with regards to hedge funds in emerging markets?
Well, as a manager of hedge funds, we are a global firm. We have a global mandate. We can be interested by a broad range of countries, sectors, and instruments. Our traditional focus, though, are the credit and rates instruments in Central and Eastern Europe, as well as Latin America, Middle East, and Africa. At each particular moment in time, we can opportunistically shift our focus to a particular country. And for instance, today, these are Turkey, Ukraine, and Argentina.
Okay, and what are the main problems, the main challenges, and the main risks when dealing with emerging market countries?
Well, in general, emerging markets are not a uniform block of countries. Depending upon the criteria you can use in the analysis, I mean, they will differ in accordance with your analysis and those criteria that you choose, be it qualitative or quantitative, economic or structural. But in general, we can basically we can say that quality of infrastructure, quality of corporate governance, and social institutions are the most important problems of emerging markets compared to developed countries.
Okay. And the Fed has already started introducing tapering, which was, some say, overdue. And today we're going to be hearing more details about the Fed meeting that's taking place today. What are you expecting from this Fed meeting, and how do you think it's going to affect the markets going forward?
Well, in general, a couple of words about tapering. The QE was one of the most powerful technical factors for the risky markets in the past few years. So 2013 talk about tapering ending gives effective opposite negative effect to those risky markets, and in particular emerging markets. Now, the good thing about this is that the easy money ends, and more differentiation between emerging market countries will be here down the road. We expect, however, that the emerging market will continue to be an interesting asset class. If you look at the graph and to put all things into historical perspective, tapering or not tapering, you will see that emerging market bond indices and emerging market equity indices largely outperformed developed market indices over the long term. Certainly, one can say that emerging markets are the place from which you cannot emerge in case of emergency. However, if you look at those factual graphs and information, emerging markets tend to be volatile in the short term, maybe more volatile than developed markets. But at the end of the day, long-term investor always emerged from emerging market crisis. You see, the difference of total return is just impressive, and it can be explained by the difference in economic growth.
Okay,
it's still there. Emerging market countries grow at a faster speed than than developed countries. Though,
do you think they're going to hit a plateau at any stage?
At some stage in the future, but they still have a room to progress. Structural reforms, quality of institutions, corporate governance, pension reforms, all this kind of stuff that will propel emerging markets still in the years to come.
So you're very positive.
Yes, we're quite positive on the long run.
Andrey, thank you very much for joining me in the studio today.
Thank you very much for your invitation.
Okay. And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.